We're going to have a Trump administration, also winning both houses in the Congress, setting up for a negative market reaction so far across key equity markets. We had the Nikkei futures closing down 5.5%. More mild reaction in Asia. Chinese equities only down between 1 and 3%, depending on whether you're looking at the offshore and onshore stocks. In Europe, we were expecting a pretty harsh opening in the futures market, but the reaction was quite mild. We have seen a bounce back in US equity futures as well. We're only down 3.5% so far. I'm completely in line with John Hardy's view on the mispricing in dollar yen. I'm writing a trading idea, buying a basket of different equity markets, and long Japanese equities are definitely in that category as a little bit more medium-term trade here. We also like to get long exposure in the DAX and the S&P 500 at current levels. Obviously, don't have too wide stops, but I think the market will soon realize that it's not a huge catastrophe. That what we're looking at here, there's always these overreaction in equity markets, driven by stops, liquidity, and I think as the dust settles, we'll swing back to beginning to understand a little bit what will the whole Trump administration mean for U.S. politics, the shifts, trade deals, geopolitical against Russia and China. But I think more broadly, I think what could be positive for equities as we move into 2017 is potentially a December hike is off the table. That could add some short-term support for equities. 2017, if Trump can mobilize support in the Congress for slashing the corporate tax rate from 35%, a marginal tax rate, down to 15%. That will make it much easier for U.S. companies going forward to repatriate all their overseas profits back into the U.S. That could be stronger for the U.S. dollar. It could be also, I think it will be on the margin. I think it will offset the drag from the stronger dollar because it will mean higher EPS growth. And I think also it will strengthen the investment sentiment. So I don't buy into the whole notion that the Trump administration will set the U.S. up for a recession over the next 12 months. If you look at the current trajectories of the leading indicators actually pointing up now, we have the impulse coming from China. We have the impulse also coming on inflation from China. And we know from the Brexit in the UK that these big shocks to the political system is not necessarily a big shock to the macro picture and the financial markets. So I think investors here should be sane. Buy a basket of US, German and US equities on these dips and keep some tight tops. But tune in to tradingfloor.com. I'll soon be releasing my trade idea and my trade basket as a reaction to this Trump victory in the US presidential election.